Welcome everybody. Day 2 of the Stay Connected series, where we are getting a bunch of amazing business professionals looking at various industries and the impact of coronavirus / COVID-19 and what it is doing to their industry and the impact that it can be having on you. We are going to be opening up for question and answers. So if you're on the live stream, there is a Q&A area down the bottom that you can ask your questions in, and I'll put it to the panelists so that they can answer those questions as and when they're available. So we have, not in order of importance, but Paul Foster from Iron Bridge, who is one of New Zealand's most experienced real estate agents and a man that I trust implicitly for my advice in and around real estate. Campbell Hastie from Hastie Mortgages has been somebody that I actually use and is a wealth of knowledge when it comes to everything relating to property. He's written a book on it. He's been on TV talking about it. And what he doesn't know from the mortgage broking side of it and the impact that this can have on your investments, I wouldn't want to be bothering asking anybody else. And we have the diversity in the panel of the ever lovely and positive Marina George from Rent Hub, who is going to be covering things from the rental market, whether it's from the investor side as landlords or from the tenant side. So I'll just get you to quickly go around the room. We'll start with Paul and work our way around just like I did. Introduce yourselves again and just a little bit about your business and who you are. Paul.
Hi everyone, thanks for having me along, Glenn. And yeah, so I'm from Iron Bridge Real Estate on the North Shore of Auckland. I'm residential sales, so I'm from the sales side of things. And yeah, so we're still active and working as best we can through this environment, and trying to make sense of where to from here.
Excellent. Campbell.
Yeah, hi everybody. I've been a mortgage broker now for since 2005. You do the maths on that. Specialising in assisting first-time buyers, particularly in the Auckland market, and you know, we've got a broad range of clients, from investors, some property development stuff, a little bit of commercial stuff, but mostly we're a lot like Paul, in the sense that we focus on residential mortgages in the Auckland market for first-time buyers. That's where it's at for us.
Marina, welcome.
Hello everybody, hi and welcome. My name's Marina. I'm the owner of Rent Hub. We're a residential property management company based up here in Auckland as well. I've been in the investment arena myself since 2002, both from the selling side, the buying side, and have owned a property management company since the last 10 years, Rent Hub for the last 2 years. And I navigate my way around at this last week or so, helping landlords and tenants navigate their way through the quagmire that they're both finding themselves in.
Yeah, so there is a whole bunch going on out there, and I've just I was looking at some of the headlines that are out there right now. We've got coronavirus, property brokers tell landlords not to offer rent holidays, over $1 billion of property deals on ice, over 5,000 house sales left in limbo. We have people that have been asking questions before this and around, what do I do if I have got a settlement coming up over this lockdown period? What do I do if I have got a landlord that is that we were supposed to be moving out and I can't get into the new property, I can't get out on the existing property, whether you've bought and sold or whether it's a tenancy arrangement. There is so much going on and quite a lot of confusion out there at the moment. So what we'll do is we're going to work our way around again, and let's just cover off some of these topics. First of all, sale and purchase of property. Now, Paul, what are you seeing that is happening at the moment? Obviously, there was still a lot of activity leading up into last week, but has it dried up? Are people actually able to list their properties over this period?
Yeah, they can list. They can't get buyers through though. So what most real estate agents were doing, myself included, were racing around with the 48-hour window before lockdown of getting video to be able to do video tours to show people.
Mm-hmm.
Obviously, there's lots of eyeballs out there that are still able to look at property online, but they can't physically go through the property. But you've got to pull the buyers out there at the moment who did sell. They're cashed up, and they're gold at the moment because they're the cash buyers that are still in a position to buy. Then there were other people that perhaps didn't sell, but were pre-approved, ready to go, and they're sort of taking a bit of a wait and see approach if they've still got their own accommodation, be it a rental or whatever it might be. So, yeah, I mean, on being on the phone, I've been on the phone this morning again to buyers. There is quite a sort of a wait and see type of approach, unless it's a real motivated buyer, which of course, as real estate agents, they're pretty gold at the moment of what we're looking for. Yep.
Absolutely. And with this problem with people not being able to get into properties to view, I know there is some articles this week about people giving people private viewings and stuff like that, clearly breaching the guidelines and the suggestions in or around staying in your bubble and stuff like that. Are things like virtual tours, are you still seeing from a real estate perspective, are you still seeing good numbers of people coming through and looking at those listings online? Is there an uptick in interest from potential investors that are looking at exiting their properties because there's just uncertainty?
Not yet. No, it's pretty quiet in terms of fresh inquiry.
Mm-hmm.
You can see online views. You can see people are sort of looking at things, but inquiry levels have dropped away. Certainly in Auckland, speaking to our Christchurch office this morning, their inquiry levels have been a bit better than ours. So that's, I think it's early days. People are still sort of finding their feet and finding out their own situation, job security and everything else. So before we see a rush of people getting rid of investment properties or whatever it might be, obviously interest rates as low as they are, there is the option of the mortgage holidays for people. So whether that, slows down any sort of rush of properties, fire sale type things, which I'm sure Campbell will talk about, but it's, obviously that was the intention of that, to stop any sort of file sales, it would seem.
Yeah, sure.
So yeah, no, it's quiet. It's quiet out there. We're having,
understandably.
Yeah, we're having to earn our money now. We don't just sit there and wait for the phone to ring. People think that's all real estate agents do anyway. But
yeah. Look, I'd endorse what Paul is saying there in terms of it being really quiet. My phone's been ringing, but it's all about mortgage holidays and what can I do about managing my cash flow, that sort of stuff. The number of new inquiries, people who want to borrow some money, go buy a house, pretty much fallen off a cliff, and as Paul said, understandably so. People are wondering, what's going to happen with my job, what's going to happen with my income. Therefore, there's quite a bit of uncertainty around that. What we sort of know for sure, I guess, is that at the moment, I don't know who it was, but somebody else used the term suspended animation. That's kind of the sort of how things are going to look for the period of the lockdown anyway, and probably a little bit beyond that. It's just a matter of sort of getting us through the pandemic piece of where we're at now, just sort of parking everything else. And yes, there's a bit of collateral damage on the way through there, but a lot of collateral damage actually, but it's a matter of just parking things until COVID-19 has kind of calmed down and we've gone from a level 4 to a level 3 and hopefully level 2. Hopefully that happens quickly, but until then it's sort of a suspended animation, and I wouldn't expect anybody to be ringing me up and saying, Campbell, I want to go and borrow some money to buy a house, and that's going to obviously affect Paul. People who've got cash in hand though, might be a different story. But even then, like properties or purchasing properties is a confidence game, a lot of it, particularly if you're property developing. That's nervous money, so yeah, I wouldn't expect too much to be happening at all between now and when the lockdown concludes. So
you use the magical term that people are bandying about a lot at the moment around mortgage holidays, deferments, things like that. And there was this announcement last week around, we support from the government, we support mortgage deferments and holidays and things like that. From your understanding and from what you have heard in the market, is there actually any official government support for this, or is it just an endorsement of people going to their bank and taking the option of deferring their payments?
That's both. There is plenty of government support. There's plenty of money behind it. And in the last 2 or 3 days, the banks have finally come out with a process. They've always wanted to do it. They've actually been on the same page as the government for some time on the mortgage holiday thing, but they just haven't developed a process around it because mortgage holidays have always been available, but it's been ones and twos, right? In good times, it's just ones and twos. But now it's hundreds and thousands sort of thing, or tens of thousands. And so you need a process to be able to handle that sort of volume. It's taken the banks a week to get there, which is actually pretty good. And from what I've seen, the process is very straightforward. It really is. What I would
Can you
say
walk
to
us through it?
Yeah, so what I would say to anybody who's in a position where they think they want a mortgage holiday is to get their heads around 2 things. One, can you prove that you're in a position of hardship? For a lot of people, that's going to be really, really easy. They've either lost their job or they have been advised that they're in a situation of reduced hours. So that's the first thing. Can you show that? The second thing is really just getting in touch with people like myself and seeing if it's an appropriate option. The application itself is really simple. It's not quite sending an email to the bank, but it more or less is, with an outline of your situation and how you're being affected by the cash flow squeeze, if you like. And from what I've seen, the banks are just doing it. They're just giving it to you for 6 months.
Excellent. On that note, though, is there a misconception, or is it true out there that under the current environment, a mortgage holiday is no interest, no principal, nothing accrues, you just stop payments for a while? Or is it how it has traditionally been, where you're still accruing that debt, but it is just added on and to the existing amount, and then so your repayments when you come back on will be slightly higher?
So I was talking to one of the reporters over at Stuff last week, and I said to her, a mortgage holiday is like going to Fiji on holiday on your credit card, right? It's all happy days and roses while you're on holiday, but you do have to pay for it at the end of the holiday, right? Your credit card balance will get bigger, the payments will be there, and you do have to do something about it. So in mortgage holiday terms, the interest, that you don't pay anything for the 6 months, and you don't have to take 6 months, by the way. You could just take 4 or 3, just whatever you think is appropriate, but 6 is the max. The interest will get added to your mortgage. So at the end of the 6 months, your mortgage will be bigger by 6 months worth of interest. And so you are going to have to pay for it. You'll be getting charged interest on top of interest, if you like. And when you look at the big picture, it's like paying basically another year's worth of interest on your total mortgage. So it's not a decision to be taken lightly. And I think if you can think of doing something different, then you should see if that's possible. But for a lot of people, a mortgage holiday is going to be absolutely necessary. They literally need to park the problem. I think that's a really important point there. You are only parking the problem. It doesn't go away. You're just parking it for a little bit, and it buys you a bit of time to think about what you're going to do next. Hopefully your job comes back.
So what are some of the alternatives that you've been discussing and suggesting?
The big one is interest only. Just pay the interest. It's not a very scientific sort of split, but a third of people are still in work, like me. It's not very highly paid work, but it's work. A third of people have literally lost their job, and the other third are on reduced hours. So for the people who are still in work, you probably don't need any sort of assistance at all. The people who are on reduced hours and that sort of thing should definitely do a budget, see what their income versus expenses actually is. If income minus expenses gives you a deficit, then maybe consider paying interest on your mortgage only. What you'll find is that obviously, because you take out the principal component, your expenses drop, and you might find yourself in a break-even position or even a position of surplus. So it actually starts with a budget. That is the first thing everybody should do. And a serious one. Don't kid yourself. Look at it line by line. Interest only is, I think that's a better alternative than going for a mortgage holiday. You could extend the term of your mortgage. So if you're currently on, I don't know, 20 years, think about making it 25 or 30 years. When your fixed interest rate comes up for expiry, jump into one of those sweet rates. You should be definitely looking at that. And on that note, consider whether or not you should break your current interest rate and jump into a better rate as well. You will pay a break fee. You will, and it'll be the equivalent of what you would otherwise have paid in interest for the period of the fixed rate that you've got left. But think about it. If you need that immediate cash flow sort of boost, you may decide to pay the price. Okay.
Mm-hmm.
A handful of options there. You should really talk them through with somebody, your broker, your bank, whoever, before you go ahead and make a decision. And in fact, most people who ring me up asking for a mortgage holiday, they don't want one. But that's just the terminology that people are using.
Yep.
And
so
once we talk them through, we could get them into something else.
If somebody's looking at breaking their existing agreement and going to a lower rate, the banks will come to the party on that and just add whatever that lump sum break fee is onto the amount owing and factor that in.
That's actually been my experience, because everybody who's asked me about, there's only been a handful of people, but they have had the equity there to do that. So the bank's comfortable enough doing that. Yeah.
Cool. Marina, the rental market. There's been a fair bit of confusion and noise out there this week around responsibilities, obligations, both from the landlord side of it and the tenants side of it. What sort of things have you been seeing and hearing this week that can possibly get some clarification and some guidance for both landlords and tenants?
Sure, there's a whole bunch of regulations that the government's brought in, specifically around COVID-19. One of those is rent freezes. There is a rent freeze on. It's not we don't pay our rent freeze. It's just a rent increase freeze. So in other words, that means that for the next 6 months, landlords are not able to increase the tenant's rent. Doesn't mean to say that tenants cannot pay the rent. They do still have to pay, and tenants are getting a little confused about that. I've gone through and rung all our tenants individually just to see what their situation is, how they're going, and some of them have said, oh, we don't have to pay rent for the next 6 months, I hear. So it is just sitting with them and explaining that's not quite how it goes. Landlords also have, mortgages, insurances, etc. to pay. So it's just navigating that one with them and getting them to understand what a rent freeze actually is. So with that, a rent freeze literally means that for the next 6 months, rent can't go up. If a landlord has, in the last few weeks, given a rent increase notice to a tenant, that is now a vote. So that can't be in place. If the tenant had started already paying their rent, higher rent, well, that can stay in place. So it's just getting those little bits and pieces ironed out and getting real clarity about what they can and can't do. Other thing is the government have also changed the 21-day notice for a tenant in arrears. It's now not 21 days, it's now 60 days. And that means that for 60 days, a landlord cannot go to tenancy tribunal to evict a tenant for non-payment of rent. There is a few things that they can still go to tenancy tribunal around getting a tenant evicted. It may be that the tenant has been causing misbehaving and causing trouble to neighbours, trouble to family. They may be able to evict them on that, but that eviction is going to be very far between. If a tenant has made some sort of an effort to pay their rent within that 60 days, no, they won't be evicted. So that is a tricky one. What we're suggesting to landlords is that they call their tenants and just have a conversation with them now about what their situation is. Landlords sort of don't like to do that because they think if they do that now, well, then it's just going to be a flag to the tenant to say, hey, I can't pay my rent. In actual fact, I've found it's the exact opposite. Tenants are really appreciative of the call, and you can pick up now if there is going to be an issue and sort that through with them. 90% of the time, they're actually currently, as we sit, there isn't. They are still able to continue paying rent.
Yep, very much a communication issue, right?
Totally communication all the way. And the other thing is, whatever you do communicate with them, if you put a payment plan in place, always follow that one up in writing, so that you've got a written record between each of you of what the outcome is.
This
Yeah,
you may or may not.
Glenn, can I just butt in there?
Sure.
I really totally endorse the idea of talking with your tenants, talking with your landlord, to try and figure out a solution. You know, it's fair to say that some rent's better than no rent.
Yeah.
So, like, if you can get a little bit and work with your tenant, and it's almost like giving them a rent holiday. Maybe you could come to an arrangement where you say, hey, look, I know you've missed last week's rent, but let's just pay it off over the next sort of, you know, the coming weeks and months. That may be a good solution, and it may actually earn you some cred from a landlord-tenant perspective if you're happy to work with people. I'm a landlord myself. I've done that in the past for tenants that have missed a couple of weeks' rent, or one where they damaged, put a cricket ball through a run slider, and they were willing to pay that off over time. And it's given me a really good relationship with my tenants, and they don't miss anymore because they know I'm not combative. I'm trying to get something from people, and
So
give them a house.
on that note, because I'm an absolute massive believer in this, is if we look at it from a rental deferment basis, we're going to defer it. You're still going to, a little bit like the mortgage, we're still going to accrue that money over time, and you are going to have to pay it back. Then I think reinforces completely the need to have that in writing, and then when they're in a position to start paying that full amount again, to make it really, really clear that there is an agreement in place that because there's the rent freeze, you're not putting the rent up. Your rent still remains the same, but your repayments may be going up because you are back paying owed rent.
Correct.
And if you don't have it in writing, then your tenants could end up potentially turning around and going, well, hey, look, we're 8 weeks out, and he's now charging us an extra $100 a week.
Sure.
That's absolutely right, Glenn. And the other thing, the reason for having it in writing is if for whatever reason it doesn't work out, the tenant just can't catch up, and it does end up at tenancy tribunal. If you've got a very clear record of what that communication has been, and you've been seen to be reasonable and every best endeavour to enable the tenant to pay, then you're going to have a much better chance if worse comes to worse and they have to be evicted. One other thing to think about is maybe don't give the tenants a rent reduction, rent holiday, but offer them, so keep the rent the same, but maybe offer them some vouchers up towards groceries, something along those lines. The reason being for that is that often tenants will struggle to get their rent back up to what it was prior to COVID-19. But if they're used to paying what their rent has been, and we've been offering them assistance in the way of something else like vouchers, well then it's not such a hard thing for them at the other end. They're still paying the same rent.
Good idea. On flipping it around the other way, I can't remember the exact details of it, but there was, in the last couple of days, there was an article in the Herald around tenants still being able to give their notice and potentially moving out during the lockdown period. Have you heard anything more in and around that? And have you got any advice for both the tenant and the landlord?
We have just had some clarification. In fact, I had that exact instance. A tenant was due to be moving in Saturday last week and now can't. And they're happy to take the tenancy up when lockdown comes up, but now the landlord is actually sitting on an empty property. And it really comes just back to working together, communicating what the situation is, who can do what. I've had another case where that was going to happen. A tenant was moving out to move into their own home, and another tenant was moving into that rental property. They've both stayed put. So in actual fact, there's nothing, no apples out of the apple cart mucked up there. Tenants staying in the existing property and the ones moving in, they'll all just move in 4 weeks. The problem comes with the tenants that are moving into what for now the landlord has an empty property. And one thing that we found out today that landlords should do is just check with their insurance policy, because if the property is actually vacant property, so the thing here has to be vacant, they may be able to have a claim on their property or on the insurance policy as though it was an absconded tenant. There may be some insurance policies may have room for that, so it's worth them checking it. Otherwise, without that, it's just a case of negotiation. In this case with the landlord that I was dealing with, he's offered the tenants 1/3 off their rent, tenants, and then the tenants have also said, well, they'll pay their 2 weeks that they paid in advance. They'll start putting that towards it now, and then we'll look to do with what, depending on how long this lockdown goes on for us to do there. So it really is just negotiation. There's no one thing is going to fit here.
Yep. You may, this may be better suited to somebody in the insurance game, but have you, any of you heard any more information around rental protection from on the insurance side of it? So when somebody, if their tenants are unable to pay, is that covered under some of their rental protection for those that have got money to pay for that? Or it is a little bit like the travel industry where they're invoking this, pandemic clause where they're saying this is unprecedented and it's not covered.
We were talking to a lady today from Real Insurance, and her words were that there's no insurance policy in New Zealand that covers that.
Yep, cool. That's just good to get clarified, because I'm sure there are plenty of people wondering that question. So again, what is going to be happening over, as we come out of lockdown? Have you got any thoughts, ideas, recommendations for people that are going to be managing this? With 5,000, I think it was something like 5,800 properties due to settle in this 4-week period. There is a whole lot of trickle down stuff that flows from that. There are moving companies that were booked in for this 4-week period. But then when things get opened back up, if it is 4 weeks, it might be 6, it might be 8. But when things open back up, there is going to be this absolute landslide of projects that are going to be in play for moving companies that are already booked. They've already got jobs on and things like that. So, from my perspective, there is a huge amount of risk around this at the moment, not just for while we're in level 4, but what happens post. There is, I think, a whole lot of legal potential arguments in and around, who's liable because they can or they can't get in and out of a property, not for the fact that technically they can't get in and out, they just physically, there is not enough movers and things like that in play to do all of the work. So what do you see happening as we come out of level 4 and over the next 6 to 12 months? I know it's unprecedented times, but I like to do this occasionally. Paul, what do you think around the property market?
Yeah, I think the lawyers are going to be the busier of the industries for those deferred settlements and how they cope with all of those. Incidentally, I mean, I've got a property settling tomorrow. They can't move in. They've agreed to settle on time. So it's a recommendation. It's not enforced. But I think most people would prefer not to be paying a mortgage for a property they're not either living in or renting out. Yeah, where to from here? Yeah, look, it's an interesting one. I think the fundamentals are still there for certainly the Auckland market to keep going, but there's a lot of headwinds now as well, a lot of uncertainty. As Campbell touched on, is the sentiment out there. It's you can look at all the fundamentals in the world, but at the end of the day, is there confidence out there? Are people going to, sellers that don't need to sell, are they just going to wait and see? Buyers that want to buy, are they waiting for bargains now? A lot of them are sort of puffing out their chests and going, they could see the rising market before. There was a bit of urgency. Now they're feeling a bit more confident. Hey, I'll bide my time. We're already starting to see some cheeky sort of offers type thing. Hey, look, it's, would they take this? No, on to the next. There's that sort of opportunistic approach. So yeah, it'll be an interesting time the next 6 to 12 months. But like I said, I think ultimately the fundamentals are there for things to bounce back. But yeah, I think it's going to be a pretty quiet 6 to 12 months. Well, certainly the rest of this year.
Yeah, I completely agree with that, Paul. The next 6 months certainly just going to be, I reckon, dead as a doorknob in terms of property transactions, and they won't really start coming back until probably like about now, next year, 2021. because it's going to take that long for people's jobs to come back, for people's incomes to, or for people to feel certain about their incomes again, certain enough to, well, I'll put it this way, a mortgage goes out every month for 30 years. Your income needs to match that, more or less. And if you don't have that level of confidence, you're probably not going to transact, or it's going to take you a little while to get that level of confidence back. So I think it's a fact that the buyers won't disappear. They'll still be there. They're like the first time buyer, for example, his or her KiwiSaver's been smashed, but that'll come back, like it will. As business picked up, it will come back. As their jobs get back into sort of full time and back into the swing of it again, their KiwiSaver accounts will actually fill up because they're contributing to them. So that'll come back. That'll take about a year, I reckon, for those people's accounts to regained all the ground. It might happen sooner if it does. Cool.
Yep. So I'll give you some insights into that. Just my own KiwiSaver account, that dropped 25 grand in 4 days. And then over the next 2 days after that, it clawed back 7.
Yeah.
I'm an aggressive. I still consider myself a young buck. I've still got a fair way to go. And so I think, geez, if you can keep your money and keep a KiwiSaver, don't draw down on it, because it's compounding interest that you're missing out on and compounding investment that you're missing out on. Keep it in there as long as possible.
I agree. It's just free money, isn't it? From your employer, essentially.
Yep. Paul Bain says, so is it going to be a quiet and flat market rather than quiet and a drop? I've got a view on that, but
yeah, I've got a view on that. I'm happy to share it. I think for for the next 6 months, my view is very negative. I kind of concur with the Westpac people saying sort of 7 to 10% drop in terms of price. I think that's where it's at for the next 6 to 12 months. Beyond that, though, the fundamentals of property here in New Zealand are still quite strong and positive for property prices. We've just got to get through to that point. You've just got to make it. Hope that your equity doesn't dry up. I think that negative sentiment that I've just expressed there is actually dependent on sellers and what sellers do, because the buyers are still there. If sellers get to a point where their income's dried up and they're kind of financially rooted, they're going to have to really seriously consider selling the property in a market where other people, buyers, have little confidence around their own financial situation.
And Dean asks, are the buyers still out there actively hunting, or are they now cautious as well? I think it's, from my side, it's still a little early to say, hey, look, they're all cautious and they're not there. We're week 1 into lockdown. That's going to be very interesting. But Paul, your take on that?
You got to remember as well, buyers are often sellers as well. So yes, the first time buyers, as you just mentioned, the KiwiSaver's been smashed. So their position might have changed along with their job security. But moving forward, and this is often the challenge when speaking to people, is in a softer market or even in a falling market, certainly if you're upgrading, it's a better time to transact. You should be selling. Your place is worth a bit less, but the upgrade is actually going to be worth less. So your changeover price is even better. But that doesn't always, register with people. So it's in a softer or falling market, the people that are upgrading and are in a position to do so with these historical low interest rates, get on with it. Keep going. That's my advice. Will
10%, the 10% drop in $1 million house is $100 grand, and it's $200 grand on a $2 million house. So
your changeover is a lot better. But will they transact? That's what's yet to be seen. Will people start to look for downgrade, relocate? We'll start to see that play out potentially. We are in a election year as well. If this hadn't come about, we sort of anticipated that it would be a slowdown coming into election time, and then so is this make it a double whammy? I guess the election seems pretty small in the scale of things now with what we're dealing with. To be honest, I never really understood why an election would stop people, because they stop, it slows down, and then it goes, okay, well now got a blue
Well,
government or a red government or a coalition government. Let's get on with it. So what was the point in not doing something anyway? But yeah, so I think it's going to be fairly quiet. But like I say, the buyers are sellers and sellers are buyers. So it just depends on their situation.
My pick as a landlord is I think it's going to, both you and Campbell were on the money where there is going to be a drop. But I think it's also going to be good news for renters, and it's going to be good news for property managers. I see there with the downturn in international tourism, there is I think the technical term is shit ton. There is a shit ton of property owners that have Airbnbs that are going to be wanting to exit. They'll either exit or they'll look for tenants, and they will take what the market dictates, and there will be I think there will be a rush of properties going on the rental market, which is going to ease the pain there a little bit. But those landlords may also then turn around, or those investors may then turn around and go, well, look, let's just exit the property now. We've made good gains over the last 5 years. Let's cash up now while we can. So I don't think supply is going to be a huge issue. That's my take on it. It's the big question up in the air is not if there's going to be a dip, it's how much of a dip.
I'm not so sure about investors cashing up, actually, mate, because they've got this question.
There'll be the other investors that are the other way around, though, right?
Well, no. You think about it, like if you cash up, you sell your rental for, I don't know, $500,000. Where do you put that $500,000? Do you stick it in the bank and earn 0% on it, or do you keep your rent coming in at 5%? You've got that choice. I think if there's going to be a lot of investors who will probably think initially, oh, bugger this, I'm just going to offload. But when they actually look at it, they go, oh, you know what? The best return that we can get is probably here. We'll stick with the property. We won't put it in the share market because we've just had our 1987 moment. The market. So let's stick with the yield we've got. Yes, we've got a lumpy investment that's not particularly liquid, like we can't sell half the house and spend that money. We've got to sell the whole thing or keep the whole thing. But we'll get a yield and our value will be stable. So I think people will end up sticking with their rental properties. Some will offload because they need to.
I think they will. And I think it's more not your professional investors. I think it's your traditional ma and pa that have gone and said, this is a good idea, we're gonna dump in it. And we're going to pick up a investment property, and now they're in a situation where their income has dropped significantly, and they need that cash to sustain themselves.
You're probably right, and for those people, purchasing a rental property was probably a good idea.
Not the right thing.
Yep.
Yeah.
But, I think professional investors, I think will make hay in the next 6 to 12 months.
Could be right. Could be right. Yeah.
It'll be interesting to see if they do anything with LVRs on that front, because that could stimulate certainly the portfolio type investors, because a lot of portfolio investors are tapped out based on the LVRs. But if they become relaxed, there's good buying opportunities. That they could be in boots and all.
Paul Baines got another question. Mate, I'm not sure any of us have got a crystal ball saying if you settle on the 29th of May, how quick a dip because you're going to be a cash buyer looking for the next property. I'm not even going to go there.
Yeah. The dip will come. I think it'll come, definitely. And you'll only know when you look back and it's past you.
Yeah.
I think if it don't try and buy in a dip ball, just buy something if it makes sense.
Yeah. And just think about how long you're going to be in the property rather than am I making the right decision right now? It's like playing the stock market. There is never the perfect time. You're never going to get it perfectly right. But if it's a buy and hold, you're generally going to get ahead.
Yeah.
Pays not to speculate, doesn't it? Don't be a speculator, be an investor, invest for long term. So it's
spoken like a true investor.
Right. Yeah.
And look at the cash flow side of it as well.
Yeah.
People are buying too much on the capital gains. We've got these interest rates now, but pop another couple of % on top of that. Can you still hold the property? Will it still wash its face in terms of the rent and the outgoings? Because if it doesn't, you need to relook at that. That's my advice.
Or maybe another way to think of that, instead of adding a couple of % to the interest rate, factor in some vacancy. Kind of the same thing, you know. If, instead of your mortgage expense going up, what if your income doesn't come in? Can you hold them? And this is the situation that, you know, Marina's clients are facing right now, and Ironbridge rental clients are facing right now, landlords are facing. Have I got the buffer to get me through a period where the tenant is still in the bloody property, because we can't pick them out, and replace them, but there's no rent coming in? Have you got a buffer for that? You know.
And as Glenn suggested, with Airbnbs probably coming into the rental market, I'm thinking there is going to be a flood of rentals up there and tenants will have choice, which leads into a longer vacancy period. Yeah.
You know, the news out today that, not news, but I'll say more opinion coming from the head of Tourism New Zealand, that it's going to be probably at least 12, probably maybe 18 months before we really open up the borders again, and then it'll be on a selective, you know, country by country who's managing the outbreak until there's a vaccine and that's gone through everyone. We're going to have rely on domestic tourism, and there is a whole heap of people that are really struggling in and around that side of it. Yeah. No,
the qualities of the New Zealand tourism. Sorry, what am I trying to say? One of the big reasons people come to New Zealand as tourists is because it's clean and it's empty, and it's easy to get around, and the natives are friendly, right? And I think what you'll see is more emptiness, more cleanliness. Everyone's going to be just as friendly, and that is even more reason for people to come here. They're not going to be able to get here, but for a little while. But I think that still the long-term outlook for New Zealand tourism is actually good. Again, like property, you've just got to hope like hell that you can get there.
Yeah. And Mr. Billy T himself, William Tardner from WhWhat, chimed in saying good advice and perspectives today. He's another man who would have been great to have on the panel, and it would have been a great last minute call up like Paul was. It was just first and best dressed when it came to the last minute call up there. Billy T, you are the man as well. So hey, look, thank you so much, guys. Look, we're sort of out of questions there with that. I think we've covered a lot of ground. There is probably some legal stuff that we haven't touched on, but I'm always nervous about touching legal stuff because you're not giving legal advice. We're just giving our opinion and insights. So if you do have any questions that you've got, people, feel free to email it through to me, glenn@connector.co.nz. And I can get it out to the team. If we can just do the round robin again, and if you've got any way or ways that people can get hold of you, if you've got further follow-up questions, how do we get hold of you? Paul.
Yeah, phone 021 752 772. We always prefer to have a phone call, but an email's just as easy at paul@ironbridge.co.nz. I think in this new world, I hadn't made a Zoom call in my life up until about a week ago, and now I'm having a few a day. So I think this is the way that even post lockdown that a bit more business will be done. It's interesting, isn't it? You don't have to go and find a park and find some money for the meter and be running late for a meet. It's just you just turn up and go on to the next one. So yeah, but no, look, I'd love to hear from anyone that wants any help and advice, even if it's just a quick phone call, just to pick my brain.
Good stuff. Mr. Campbell Hastie.
It's funny you say not running late. You can still run late with Zoom.
But your excuses are down to absolute minimum.
Yeah, that's right. I was busy having a shower and putting my pants on. Yeah. People can find me just by Googling Campbell Hastie. That's probably the easiest way to do it.
Yep.
I won't give my phone number out. I mean, I'm happy to, but just Campbell Hastie. Just go into Google, stick it in, and my email, phone number, etc.
Great. I'm going to SEO my site for Campbell Hastie right now.
Thanks.
Yeah, Marina.
And for me, I'm Marina at renthub.co.nz. So www.renthub.co.nz. If anybody is wanting a template to send to their landlords once they've come to payment arrangements, email me, let me know. I'm happy to send that out.
Yep, and that's from both sides, right? Landlord or tenant wanting a copy of that?
Absolutely. Yep.
Awesome. Thanks, guys. It's been an absolute pleasure having you on. And for everybody else, we're doing this 1:30 every day over the lockdown period, at least over the first 4 weeks. So if you know of anybody that you would love to see on this, if you've got an area of or an industry that you would love to get some insights on, shout out, let me know. If you've got any feedback, again, let us know, and we will see you each day at 1:30. You can just go to our website, connected.co.nz, have a play around in the menu there, and you'll find a link to the Stay Connected web series, and all the upcoming webinars are there. Cheers all, have a great one, and we'll
Thanks, Glenn.
catch you
Bye.
later. Bye.